Hey friends, it's Kendall back here again for the third installment in our financial friendship. I thank you so much for taking some time to spend with me to watch this video. If you missed the last one, we talked about a couple things, including how to become a millionaire. For that, you need three things. You need patience, a little time, and compound interest. Now, in order to reap the benefits of compound interest, you have got to be able to invest. If you do not have a platform that you use, there is one that I greatly recommend, and that is Webull. I personally use Webull, and I have a Roth IRA through them. In the description below, if you click on the link, if you start an account with Webull and you invest up to $100, you will get 2 free stocks, one valued up to $1,400. Now, if I get 2 friends to do this, I myself will get a bonus and I will get some extra stocks as well.
Disclaimer.
So by you helping yourself out to reap the benefits of compound interest, you can help me out as well. Guys, I appreciate so much you coming back and spending some more time with me. Your time is precious. I do not want to waste it, so let's dive into the content. Today, we are talking about sweet REITs. A REIT is a real estate investment trust. That means it is a company that invests and develops a portfolio of properties in a particular sector of real estate that they then rent or lease out. And what they get back in cash flow, they then return to you in the form of dividends. Now, REITs fall into a very special category when it comes to taxes specifically. They do not pay federal corporate income tax. Instead, there is a loophole that they pretty much get around it, and the way that they do that is they provide a substantial amount of their profits back to their shareholders. The amount that they provide back to you is 90%. So with that means 2 things for you and I as investors. It means number 1, you're going to get a higher dividend yield, and number 2, you will also get paid much more frequently. The REITs that we're going to be talking about in today's video, all 4 of them are monthly paying dividend REITs. So you will be getting monthly cash flow from these companies. You may be concerned because if a company is paying out 90% of their profits, how are they ever going to grow the company? And that's a valid concern, but you will see based on the market cap that these companies have, they bring so much money in that they have plenty in that 10% to invest back in, and we'll talk about some of the growth of those companies. Now guys, you cannot talk about real estate investment trust without talking about the Mac Daddy of them all. Number 1 is Realty Income, ticker symbol O. Realty Income is a real estate investment trust that specializes in obtaining commercial properties that they rent back to major corporations. Now, with Realty Income, some of their holdings and the tenants that they have include the likes of Walgreens Boots Alliance or Walgreens Pharmacy, 7-Eleven, Dollar General, FedEx, Family Dollar, LA Fitness, AMC, and Regal Theaters. Now guys, those last 3 may be somewhat concerning for you. When you think LA Fitness, AMC Theater, and Regal Theater, those were hit substantially with the pandemic, and a lot of them had to close their doors for a while. That may make you concerned with the balance sheet of this company. Don't worry, because their balance sheet stayed pretty much stable all throughout the pandemic. They did not have to cut their dividend. They did not have to stop paying their dividend. And they actually have paid a dividend for 610 consecutive months. If you do the math and you divide that by 12, that is 50 years of consecutive dividend payments that they have been making to their shareholders. Guys, that makes them a dividend king by definition. Not only are you getting a very constant, stable dividend from this company, also over the past 94 quarters, they have also increased their dividend, and it doesn't look like they're going to stop now. Now, this company continues to do that because they are so diversified. They're diversified specifically in the vast majority of properties and sectors that they're in. They have over 6,600 different properties worldwide, including throughout all 50 states, in Puerto Rico, and parts of the United Kingdom. They are found across 56 different industries, and they currently have an occupancy rating of 98%, which means 2% of their properties are not being rented right now. That gives them the opportunity to bring in more tenants, bring in more growth, more cash flow for them, more dividends for you and I. Guys, as of May the 28th, 2021, Realty Income is trading for $68.58 per share. Now, with that being said, they have a dividend yield of 4.115%, which equates to 23.5 cents per share per month. Guys, this company is found throughout so many sectors that they have so much diversity. And with real estate investment trust, I want you to remember something. Diversity equals growth and stability. And you'll see that across these other examples as well. Now, number 2 is Stag Industrial, ticker symbol STAG. Stag Industrial is a real estate investment trust specializing in the acquisition, ownership, and operation of single-tenant industrial properties, including warehouses. Now, they do not have nearly as many properties as Realty Income at only 494 properties. However, that amasses 99 million square feet of property. That is huge. Their largest property that they have is found in Chicago, Illinois, and it's rented by a small corporation on a 5-year lease that you probably have never heard of called Amazon. Amazon is one of the tenants for this company. Now, as e-commerce continues to thrive, companies such as Amazon and other e-commerce companies need places to store their goods. That way, when you and I order it offline, they can then ship it to your house. That means that they're going to need more places as they continue to grow more. Jeffy B and the board of directors at Amazon have already mentioned they want to extend their partnership with Stag Industrial, and it would be insane for Stag not to do that. Amazon is not found in the top 10 as far as tenants for them per square footage leased. The top 10 holdings for them include the likes of General Services Administration, XPO Logistics, Solo Cup, DHL, FedEx, and Carolina Group, to name a few. Now, guys, this company is very diversified, and based on this, you can see that no company occupies more than 2.6% of their portfolio. That may change as Amazon continues to extend their partnership with this company, but as of now, that is the number, 2.6%. They also do not have any industry that operates more than 13% of their overall portfolio. What that means for you, again, diversity equals stability and growth, as we had mentioned. As of May 28th, 2021, Stag Industrial is trading for $36.10. They have a dividend yield of 4.042%, which equates to 12 cents per share per month paying into your pocket. Since this company's IPO in 2010, they have consistently paid out dividends to their investors, and they have a whopping 7 years of growth already. Because they have paid out dividends for greater than 10 years but less than 25, by definition, that makes them a dividend contender. Now, guys, the next on our list, number 3, Gladstone Commercial, ticker symbol GOOD. Remember, it's always good to have a good company in your dividend portfolio. I know it's cheesy, sorry. Gladstone Commercial is a real estate investment trust that specializes in single-tenant and multi-tenant leased industrial and office properties. Back to industrial, that means warehouses yet again, so this company should see a thriving market cap for themselves as e-commerce continues to grow as well. This company is very diverse. They have currently 120 properties throughout 25 different states. By the end of 2022, they plan on expanding into 2 additional states, including Kentucky and Nevada. They also currently have 107 tenants that are in a long-term lease. This company has long-term leases, which equates to less turnover, which equates to more stability for you and I. This company is not only stagnant, they have been growing consistently. Since their inception in 2003, this company has grown at a rate of 18% per year. They also currently are renting out, and they have an occupancy rating of 95.5%. And since their inception in 2003, they have never had an occupancy rating less than 95%. That means through the Great Recession, through the years of 2008, 2009, and the recent pandemic, they've never had less than 95% of their properties being leased at a given time, which is very reassuring as an investor because you get that stability. Now, as of May 28th, 2021, Gladstone Commercial has a stock price of $21.63 per share. They have a dividend yield of 7.011%, which equates to 12.5 cents per share per month. This company has consistently been paying that 12.5 cents per share per month since January of 2008, which makes them, again, by definition, a dividend contender. Now, guys, number 4. Last on our list is a little bit of a risky one, okay? And we'll dive into why. But number 4 is Orchid Island Capital, ticker symbol ORC. Orchid Island Capital is a specialty finance company operating as a REIT, investing in private mortgage-backed securities. What Orchid Island Capital does is they obtain mortgages from larger corporations that you then pay directly to them. Every month that you and I pay our mortgage, the interest that's on that comes back as cash flow to them that they then return to the investors in the form of dividends every month. Now, this company currently has a market cap of $367 million throughout mortgages that are backed through Fannie Mae, Freddie Mac, and Ginnie Mae, which makes them government-backed securities. The pandemic, as I'm sure you could be aware of, really hurt this company. Their balance sheet took a major hit. With all the forbearance of the different stimulus packages, people forced out of the workforce as jobs were lost and companies were closing, this company took a huge hit. And it did, unfortunately, have to cut their dividend, which we'll get back to in just a moment. But guys, as people are returning back into the workforces and the forbearance durations are dwindling down, this company's balance sheet does appear to be improving. They currently, as of May 28, 2021, are trading for $5.47 per share. They currently have a dividend yield that is a whopping 13.62%. That equates to 6.5 cents per share per month. Guys, back in March, they unfortunately did hit a big hardship in March of 2020 and cut their dividend from 8 cents a share all the way down to 5.5 cents a share. Now they have been rebounding as they are getting people paying their mortgages again and getting that cash flow. In July of 2020, they increased their dividend back up to 6 cents per share. And then the following month in August, they increased it to 6.5 cents, where they have been consistently since. That is why this is a bit of a risky company.
Disclaimer.
But it may also be a great benefit for your portfolio. Now, guys, with all that being said, I'm just some guy on YouTube. I am not a financial advisor.
Disclaimer.
I cannot give you financial advice. What I do recommend is that you take these 4 companies, you look into them, see if they make sense to you, see if it's something that you would be passionate about putting your money into, and if it is, add it to your portfolio, and I wish you all nothing but the best. Remember the motto of this channel: educate yourself, invest wisely, and be prosperous. Guys, I wish nothing but prosperity for all of you, as I do for myself as well. Don't forget, if you want to get some free stocks and help me out by getting me some free stocks, below in the description, click on that link, download Webull, set up your account, invest up to $100, and you too will receive free stocks in return. Guys, I appreciate you so very much for taking your time out of your day. It is precious. I never want to waste it. If you did get benefit from this, do me a couple things, guys. Hit the like button, hit the subscribe button, and press that notification bell so you know when more content is coming out. Until next time, I'll miss you. I love you. Peace.